By the end of this video, you'll know exactly what altcoins are, how the market actually works, and the one brutal truth about them that most people in crypto won't say out loud. And that last part, it changes how you see the entire space. So grab something to drink and let's get into it. Here's the simplest definition you'll ever hear. An altcoin is any cryptocurrency that isn't Bitcoin. That's it. The word literally means alternative coin. The term appeared around 2011 when Bitcoin alternatives started emerging, and the floodgates never closed. Today, over 20,000 cryptocurrencies are listed on tracking sites like CoinGecko. Some estimates, counting unlisted tokens, put the real number above 2 million. 2 million coins. Let that breathe for a second. To make sense of that chaos, here's the framework that actually works. Altcoins fall into roughly 6 categories, on a spectrum from serious financial infrastructure to pure digital casino chips. Smart contract platforms like Ethereum and Solana let developers build apps on top of them. Stablecoins pegged to the dollar are basically the plumbing of the whole market. DeFi tokens power decentralized lending and trading. Utility tokens fuel specific platforms. Privacy coins hide transaction data completely. And then meme coins, which are exactly what they sound like, and we'll get there. Picture a teenager in 2013, hunched over a laptop on a Bitcoin forum, debating in green text on a dark background whether this new coin called Litecoin would ever matter. That's the culture this was born from. DIY, libertarian, slightly paranoid, completely convinced they were seeing something the rest of the world was missing. By 2017, those same forums had migrated to Telegram groups with 50,000 members, Times Square was covered in crypto ads, and people were quitting their jobs to trade full-time. Here's a number that puts the stakes in context. When Ethereum ran its crowdfunding sale in 2014, it sold ETH at roughly 31 cents per coin. At its peak in November 2021, one ETH was worth approximately $4,891. That's roughly a 15,000x return. A $1,000 investment became about $15 million. Not a misprint. That one data point explains the gravitational pull of this space. And here's why it matters right now. In January 2024, the SEC approved the first Bitcoin spot ETFs in the United States. BlackRock's iShares Bitcoin Trust hit $10 billion in assets under management in roughly 7 weeks, one of the fastest ETF launches in history. Ethereum spot ETFs followed in May 2024. Institutional money is moving in at a scale the market has never seen. The cycle that created those Ethereum returns may be entering a new phase. Whether you're curious or skeptical, that's worth understanding. Now here's where it gets more interesting. The altcoin market doesn't move randomly. There's a documented pattern. Traders call it altcoin season. And once you see it, you can't unsee it. Bitcoin rises first. Then profits rotate into Ethereum. Then into large cap altcoins. Then finally into small caps and meme coins. The Bitcoin Dominance Index tracks exactly where we are in that cycle. When Bitcoin's dominance drops below 40%, historically it's almost always alt season. Smaller coins running hard. Solana is the best case study for how wild this cycle gets. It launched in 2020 at roughly 50 cents. By November 2021, it was trading above $250, a 500x move. Then FTX collapsed. Solana was deeply tied to FTX's founder, Sam Bankman-Fried, one of its biggest backers. Sol crashed to under $10. Most people wrote it off entirely. Then it recovered, back above $250 by late 2024. 3 complete cycles on one coin in 4 years. But there's a story that shows something even more surprising about this ecosystem. In September 2020, a decentralized exchange called Uniswap airdropped 400 Uni tokens to every wallet that had ever used the protocol. No announcement, no warning. You just logged in one day and the tokens were there. Within months, those 400 tokens were worth somewhere between $3,000 and $10,000. Thousands of people had used Uniswap once, paid $20 in gas fees on a small trade, and completely forgotten about it. Forums filled with posts. I used this thing once 8 months ago. I just woke up to $8,000. It's the crypto equivalent of finding $10,000 in a coat pocket you hadn't worn in a year. That story matters because it shows something real. Being inside the altcoin ecosystem, understanding it, using it, paying attention, creates asymmetric opportunities that pure observers never see. If this is clicking for you, hit subscribe. I drop videos like this every week, and the best part is still ahead. Okay, here's the thing nobody in crypto likes to say clearly. Most altcoins go to zero. Not some, most. A 2018 analysis by a research firm called Satis Group found that roughly 78% of ICO projects were identified as scams at the time of their offering. Around 90% of ICO tokens from the 2017 to 2018 boom ended up trading below their original sale price. A 2023 study of over 73,000 NFT collections found that 97% were effectively worthless. The most devastating example of what that means for real people is Terra Luna. In May 2022, a stablecoin ecosystem called Terra collapsed. Its founder, Do Kwon, had dismissed every critic of his design months earlier with a now infamous line, "I don't debate the poor." His stablecoin UST was supposed to hold exactly $1. Instead, it depegged and collapsed to nearly zero in approximately 72 hours. Its sister token Luna went from $80 to $0.0001 in days. Somewhere between $40 and $60 billion in market value was erased. Do Kwon became an international fugitive, arrested in Montenegro in March 2023, facing fraud charges in the US and South Korea. On Reddit's Terra Luna forum, people posted what appeared to be farewell messages. The South Korean government set up a crisis hotline specifically for crypto loss victims. A man identified only as Mr. Kwon posted that he had lost 1 billion Korean won, roughly $800,000, his entire retirement savings. These weren't reckless gamblers. They were people who trusted a system that looked legitimate, built by someone who sounded credible. So here's the actual insight, the one that reframes everything. The altcoin market functions almost exactly like early-stage venture capital. Most startups fail, most bets go to zero, but a handful return 100x, 1000x, or more, and those returns cover everything else. The difference is that venture capital is illiquid, locked up for years, and available only to wealthy accredited investors. Altcoins are that same risk profile packaged as a liquid asset anyone can buy on their phone in under 2 minutes. That's not inherently good or bad, it's just the reality of what this market is. The people who won on Ethereum in 2015, or Solana in 2020, or the Uniswap Airdrop, they weren't necessarily smarter. They were curious, they were early, and they understood what they were holding and why. The people who lost everything in Luna weren't stupid. They trusted systems that looked real and people who sounded credible. The altcoin market is a live experiment in human psychology, trust, and the question of what makes something valuable. Some of these projects will be the financial infrastructure of the next generation. Most won't. And the genuinely hard part, right now nobody knows which is which. So there you go. What altcoins are, how the cycle works, and the uncomfortable truth the smartest players in this space already know. It's a high failure rate game where being informed and early matters more than almost anything else. If this helped you see the space more clearly, share it with someone who's curious about crypto but doesn't know where to start. Subscribe if you want more. Next week we're going deep on exactly how to read a crypto white paper and spot the red flags before you put a single dollar in. You won't want to miss that one.